So right now, the cryptocurrency market is at the most fear it's ever had in the past year. It currently reads a number of 22 in terms of fear right now. And just last week, it was at a point of extreme fear with a number of 15 at its absolute lowest. Guys, this indicator right here tells you the overall market sentiment of what's happening in the cryptocurrency market. You could see back when Bitcoin was reaching all-time highs over here, we were at a point where we had extreme greed. And then over here, when Bitcoin was reaching all-time highs at prices of $71,000, $72,000, we had extreme greed. And it took a period to get out of that and snap out of those periods. Now it seems like we're setting ourselves up for a huge run this upcoming bull market and throughout the remainder of this year. But the thing is, the overall cryptocurrency market is seeing broader effects of the overall economy. Macroeconomics are starting to take a toll on cryptocurrency, in which some of these macroeconomic things are short-term bearish, but long-term bullish, and set the markets up to be healthy in the long term. So I think a lot of us understand that in our DeFi portfolios, we have to factor this in, and we should be taking an approach that prioritizes asset accumulation over chasing profits and over profiting tomorrow. I would rather have an additional 0.1 Ethereum tomorrow than have an additional $2, even $300 tomorrow, because in the future, 0.1 Ethereum is going to be worth more, and that's what I'm setting my portfolios up for. I currently have about $50,000 allocated to DeFi. I just did a $25,000 injection last week that is waiting to be deployed this week while it pins in Coinbase. But point is, I am so bullish right now. I'm more bullish than I've ever been. And to show you the results of this exact system, here's a post not even 24 hours ago, a $5,000 deposit, which keep in mind, this is their first deposit, trying out liquidity pools for the first time. So it's always great to see people take that first step. With that being said, $27 in earnings, profiting $18 versus HODL, doing a 90% APR. Yes, in this instance, they have a little bit of price profit as well, but point is they're generating income right here. Another one right over here is down $2,500, but their assets are down $4,500. But the thing is, they have nearly $2,000 in Ethereum, and of that nearly $2,000 they have $1,700 in profit versus HODL, doing a 255% APR. That's another great result that we have right there. This one just a couple days ago as well, Lucas over here, profiting $3.80 against HODL with only a $7.87 deposit. And I know that this does not seem like a lot, but do keep in mind that a lot of these people are beginner DeFi investors, and they're already achieving these results. When they start to scale up their capital to $10,000, $25,000, $50,000 per position, these results are going to be linear with how they scale up their capital. Another one over here has $1,800 in total deposit, $71 in earnings, and $67 profit versus HODL at 131% APR. Guys, to show you my own personal results, I am down $10,000, which seems like a huge scary number. I'm down 24% because I'm in highly volatile assets, but at the same exact time, I have $800 in earnings on this position, a $680 profit versus HODL, relatively broad ranges, so I don't have to manage it, and an 85% APR. Over here, $193 in earnings, $193 versus HODL. I have a 63% APR in this position. So this just goes to show that you don't have to be bleeding assets in this market. You might be bleeding cash, but so is everybody else that's holding cryptocurrency, which is a huge portion of the United States, Canada, Mexico, and a lot of other countries as well. So while they're bleeding dollars, you're bleeding less dollars, but at least you're not bleeding assets. You're accumulating more assets. Just another position right over here of mine, which is down $2,100 or so, $820 in income, $821 profit versus HODL. And that's using this DeFi formula system. And I want to tell you a little bit more about it today. The same exact system that we've been running for the past 2 years that we've been in business at Builder Wealth, helping people build portfolios to accumulate more assets. So that being said, we take a 5-phase approach. Phase 1 is obviously blueprinting, setting everything out. Construct is obviously our phase where we're diving in, finding different liquidity pools. Launch is our phase where we're actually deploying the capital, setting things up, and actually earning income as of that phase. Manage is our phase where we dive into different tracking processes, how you can use automated tracking systems, how you can enhance your management system and your management flow. And then phase 5 is our optimization phase, where we continuously refine the portfolio. We now have the data. We can set up our DeFi flywheel, so that way we can compound it in a strategic manner. So that's the high level overview of it. Now I want to dive a little bit deeper. So phase 1, one of the primary things that we focus on there is choosing the right assets, right? You need to have some good assets in your portfolio. Most people, they start on a tool like Metrics Finance. They start on a tool like DeFi Llama, whatever tool you're using to discover different liquidity pools. They typically start there. And then they just look for the best performing pools. They look for stuff that's going to continuously produce high APRs and stuff like that. Guys, who are we kidding? 37% APR with a broad range on Ethereum BUSDC, that is pretty damn good, right? I know if you got $1,000, $5,000, it's not going to do that well. But at scale, $50,000, $100,000, that's pretty damn good. And that's what we're looking for here in DeFi. We're looking for good returns that are worth the risk that we take on. Guys, in traditional markets, you're going to have just appreciation, or you might have appreciation as well as cash flow, but it's going to be like 15-20% per year. I was just looking at some Section 8 rental properties doing 22% per year cash on cash return. Guys, I can get 22% completely liquid without having a tenant in my property that might destroy my property, and I can get that in DeFi, right? Same exact return by just using cryptocurrency stablecoins. So this is by far the best industry for by far the best returns. So we have to keep that in mind. We can't get too greedy. I'm currently getting about 80% overall on my portfolio, which I am pretty happy with simply because I don't want to get greedy. I don't want to sacrifice my entire portfolio just to get a 100% APR, 120%, and then end up having a bunch more price depreciation or end up underperforming Ethereum because I'm in some random altcoins that don't make sense to be invested into. So we don't start on Metrics Finance or whatever discovery tool you're using. You start on tools like CoinGecko, CoinMarketCap. We're going to go over to CoinMarketCap today because we typically use CoinGecko, and I do want to switch it up a little bit. And we want to find assets over here. So a couple things that you have, you can go over to the cryptocurrency section and go over to categories. I highly recommend that you select categories that you're bullish on, stuff that you are familiar with. But with that being said, try to avoid the meme coins, right? So if I were to look at, let's just say stuff that was made in America. This is a big narrative right now, cryptocurrencies that are made in America. I'm ideally seeking for different cryptocurrencies that have utility, give you a reason to hold them. That's going to be stuff like Link. It's going to be stuff like Sui, like AVAX. We go down, Uni is arguably has some utility, right? There's other protocols as well, like Ondo, Aave, Caspa, Render. We keep on going down this list. There's a lot of different projects that we can invest into that have utility here. We want to look for those types of projects. One of the ways that we can identify if they have utility or not, go over to their website. If you can't learn what they do from the homepage of their website, you should probably not invest into it. For example, GRT, I go to their website. Fast, easy, blockchain data, basically. It organizes and serves Web3 data. So they're a data infrastructure company. Now it tells you some of their USPs, like build faster, less servers, spend less, 60 to 98% less per month. And I know this hands-on because we use this data for Metrics Finance. It's significantly cheaper. We were quoted multi-$1,000s per month. We use the graph. We pay a couple $100 per month right there. Increased resilience. It's really good uptime, right? Tells you about the different products over here. And if we just keep on scrolling down, we'll be able to learn more about how their token plays into this. So the token plays into this because people have to delegate GRT into specific subgraphs, and those subgraphs will then get indexed at a higher rate. And you can see some of these are providing substantial APRs, like 53% APR for delegating into this subgraph right over here. So the point is, there's a lot of opportunities. You can delegate into these different opportunities basically, and by delegating, you're allowing them to have priority essentially for the data and have faster loading speeds and stuff like that. So it's a pretty cool concept, but that's the types of projects that we want to seek after, right? Ones that actually have use case. And I know this firsthand, but you can essentially pay in GRT. You'll get a slight discount if you pay in GRT, but also you can stake GRT into your own subgraph so that way it gets indexed better. And then obviously there's the other side of things where users can delegate into different subgraphs as well. And after we've determined those assets, we want to fill them in over on Metrics Finance. So I'm personally looking for stuff paired with ETH. So maybe I'll type in must include ETH, go over here to GRT, go over here to Aether, Render, Desync. Let's just say we wanted to do FET. We can do that one as well. We could do Edge. We could do Tau. We could type in all these different opportunities in these tokens. And then from there, we could start to sort them through. Isn't this so much easier than looking through thousands of liquidity pools? We have 14 right here. 14. Super easy to browse through them. We could even sort them by APR, like over here, Ethereum to Edge, showing a great APR. If we continuously go down, we have Desync Ethereum, 186% APR. Ethereum Aether, 174% APR. There's a list of different opportunities. And from there, after we've determined which opportunities we want to deploy our capital into, we simulate this. And this is something that I have not seen on any other tool. Right? And I don't mean to boast or anything because I am the founder of this software. Full transparency. I've spent hundreds of thousands of dollars build this software, but some of these features are going to be under the pro plan. Others are going to be completely free to use. I will say it's only $40 per month. When you're talking about, in this instance, making $40 per day, it's well worth it for the results that you're going to get out of it. With that being said, let's just say we were to deploy $10,000 here, right? We go in here, we choose our range, we do a broader range. Keep in mind, we want to do broader ranges right now just because the market is moving so fast. Say we're to do $72,000, and then over here, let's just say we're to do $72,000 as our max price, and then maybe $40,000 as our min price. Gives us a little bit more Aether. Maybe we're more bullish on Aether. If we look at the past 60 days, you can see over here, Aether has recently outperformed Ethereum, which is why I'd want to have more Aether exposure. And then if we just go over here and look at the recent data, use like say 14 days of data or so, we're doing 155% APR. That's pretty good, right? This has $2 million in TVL, average daily fees of $1.5 grand roughly, an average daily volume of about $500,000-$600,000. So this is a pretty solid pool. I'd mind deploying my capital in here. I could somewhat scale this up. If I scale it up from 10 grand to 100 grand, my APR goes from 154% to about 127%. Just because we are deploying more capital on these individual price points. The point is, this is a pretty solid opportunity. So that's where we're moving into phase 2 of Formula. We're starting to simulate these results, and we're starting to find these liquidity pools using Metrics Finance, using DeFi Llama, or using whatever tool you want to use to find those pools. And after we found them, after we determine that they're great pools, we can save them to our portfolio. So we have an aggregated list of them over here on Metrics Finance. But then we could actually deploy into them. Just use this button, go right over to Uniswap. Say we wanted to deploy into Ethereum to Aether. We could do that, and we could go right over here. Select the fee tier, continue, type in our price range, type in deposit amounts, and boom, just like that. Get deployed into this liquidity pool. Start earning income and start accumulating more assets. We're going to dive into phase 4 and phase 5 here in just a second. But before I do that, if you guys do want to follow along with this, there's going to be a link to this site that just tells you about what the DeFi formula is, some results that it's accomplished and stuff like that, and a little bit more. That's going to be right below this video if you guys do want to check that out. Again, no push whatsoever. And if you guys do want to work with us and actually have us implement the DeFi formula for you, be on the one-on-one calls with you and walk you through this process and actually have a tailored approach for your portfolio, there's a link to apply. You can just hit apply now. It'll take you down to the bottom of the page, and you can schedule a free audit with my team. With that being said, let's talk about the launch phase, because again, you can do this through Metrics Finance. Just track your positions, which we recently just added the ability to add multiple addresses if you're on the pro plan, and you can track multiple addresses at once. But point is, like, once you get deployed, you're going to see something like this pop up once you paste in your wallet address on Metrics Finance. So if we were to dive into this Ethereum to Tau pool right here, I'm going to show you what metrics I'm paying attention to. Obviously, we want to make a profit, but at the end of the day, you have to realize that we're going to run multiple Ethereum to Tau positions, right? And this one might close out at a huge loss. The next one might close out at a $10,000 profit. Net, we might be at a $2,300 profit. These other ones at 10 grand, this one's negative 7.7K. That's not a 10 grand profit, that's a 2.3K profit. So we're looking at the overall strategy. We want to understand we're looking at Ethereum Tau strategies. We're looking to profit on the strategy, not the actual position itself. Because these positions are going to go down, they're going to go up when the market goes down and up, right? Our strategy wants to profit, basically. An example that I want to go ahead and show you. I was in that Aether pool a while ago. Look at that. Made $7,200. Even though the assets went down, I made $7,200 because I had $8,700 in overall fees. I did a 146% APR while being in this pool. But to look at this, the next thing I'm paying attention to is my versus hodl, right? We have a $700 profit versus hodl right here. We have $800 in overall earnings. So when I do the math, that's going to tell me my profit margin on my yield. It's going to be about an 87.5% profit margin right there on my yield, which means 87.5% of that is used to accumulate more assets. The other 12.5% of that is going to pay down any divergence loss or pay down any difference between being in the liquidity pool versus holding, essentially. So that 87.5% right there is accumulating more assets, the approach that we want to take right now. We want to be able to accumulate these assets at low prices while they're at low prices without even having to inject more capital into the market. I'm also paying attention to asset gain and seeing how that affects it. Like, even though my profit loss is down, it's primarily because of the asset gain, right? And the assets are down $8,500, right? When we add my income to that, I get negative 7,700. So that's where that number comes from. I like to look at it expressed as a percent of the overall position as well. So negative 7,700 is minus 24%. So that's a good metric there as well. Another thing that I'm paying attention to over here, this is the most important, my price range, right? Where am I going in my range? When I'm up here, I'm going to have the most divergence loss. When I'm down here, I'm going to have a little bit lower divergence loss. Over here on my entry, I'll have none. So I want to rebalance at periods where I'm close to my entry price, basically. And again, I want to look at the overall trend, make sure that we are capturing the trend, and see if there's any rebalancing that needs to be done. And this divergence loss table tells me exactly what metrics I'm outperforming. So I'm outperforming every metric except if I were to just stick my money in Ethereum. I'd have $24,267. Since I'm in this pool, I have $23,256, but add my $800 in income, I'm still at like 24 grand or so. So I have $200 more if I just stuck my money in Ethereum. But our goal is to outperform all these metrics over time. And it's not going to happen as soon as you enter pools. It's going to happen over time. And then optimization. This is about building your DeFi flywheel and just refining things based on the data, right? Changing up your rebalance strategies, changing up different strategies as a whole, implementing more advanced strategies like potentially lending and borrowing, looping, One of the things that we do over here is we loop. I'm personally a big fan of looping. I'm less of a fan of borrowing against your assets and putting in liquidity pools, more of a fan of just putting in liquidity pools and profiting against holding the market. But over here, I'm looping. These are my hodls, right? So I have 50 grand in hodls right over here on the Arbitrum network. I'm borrowing 13 grand or so. And that 13 grand, I actually shifted into hodls over here at lower prices than we're at currently. So that way I was able to leverage up. Like the majority of this Bitcoin right here was borrowed. I actually probably only have like $22,000 of wrap Bitcoin right now, but I have 28,000 of exposure because I'm borrowing USDC and using that USDC to get more exposure while the prices are low. So this is one of the looping strategies you can implement as well. Guys, if you enjoyed today's video, make sure to drop a like, subscribe, notifications turned on. Let me know down below in the comments what type of content you want to see next. And of course, if you guys need any help with your DeFi portfolio, feel free to check out the link right below this video. I'll see you guys in the next one. Peace out.